What is going on, guys? Happy Friday. Welcome on into another Power Hour live stream. We are post Jerome Powell Jackson Hole madness, and the S&P just hit a new high of the day just like 10 minutes ago. So here we are. But it hasn't gotten there in a very linear fashion. We did dump pretty substantially down into these lows around 435 or so on SPY. And then quickly have slingshot back about $5+ to the upside to where we are right now. So plenty of good volatility if you've been looking for it. So here we are. If you've been trying to get a gauge of like, oh, what's going to happen? Well, it hasn't been very clear. And does this give you any more clarity on the daily chart? Not really, although I think it is a decent look, or at least a positive sign for bulls. Now, I think the bigger key is going to be breaking the high of yesterday. So that's probably not going to happen until next week, if it even happens. Last time we had a bearish engulfing, we were not able to breach the bearish engulfing highs, and then we eventually rolled over. So same kind of idea, I guess. Maybe could be a thought where we need to breach these highs back over 445. So about another $5 up from here, and then I think bulls can start to feel a lot better with some higher lows. If not, then we are, still trending down. So that's kind of the deal. What's going on, guys? So we have a great little Friday. Personally, I'll post the trade recap in about probably like an hour after the stream or something, whenever I can get it up. It was a terrible Friday for me, but it's still, I finished the week green, but like by a thread, which is okay. But there's some good lessons in there, some things that I think are worthwhile takeaway wise, and some really good reasons, and then stuff that I'm gonna log, journal, note to improve for the future. But yeah, AMD crossed me up a couple times and wasn't worth it, but it is what it is. I'll cut that some people on cup and handle. Oof. Profitable week is a profitable week. That's what we like to see, though. That's what we like to see. Hey, same for me. I think it's like $50. But hey, $50, $50, I guess. And then I got a free stock from Robinhood. So again, it was like $30. So I guess it was $80 if you want to count that. But I'll take it. Better than zero. Better than $0. That is very true. There's also that's the day trade side. The Robinhood portfolio, I think I'm going to talk about it in I think I haven't I got to post like a little video for tomorrow. I'm going to talk about it here. By the way, have you seen this? Robinhood Gold, if you have gold, they're giving you a 3% match on IRA contributions. So it's like, if you're not using Robinhood for your IRA, like, what are you doing? It's almost kind of what they're like making you want to do, which is pretty cool. So I would recommend that, to be honest, if you are kind of like a passive buy and hold, dividend stock, dollar cost average, like IRA type of guy. 3% match if you have Robinhood Gold, which is $5 a month, and it allows you to use margin and gets you like a little bit of a better rate and stuff. A lot of perks to it. It's like $5 a month, so pretty cool. But yeah, right now, here's the portfolio. I mean, I may as well we'll talk about it here because we're live, and why not? What's going on this week I think it was a good week. Yeah, it's up like 7%, $700, which is kind of volatile, but not surprised based off some of the moves we've had. And I have to say, this is actually really good in my view, because we're not at highs on the S&P. Like July 19th, which is funny, it's my birthday, that was when this portfolio hit its recent high. And if you go back to SPY hit its high shortly after the 19th, and then it's pulled back. And so I've been kind of like, okay, how are we going to be able to handle the portfolio in a down move or in a downturn, in a drawdown? Because we didn't handle, because if you go back to March, now March is kind of a freak event because of the whole bank situation. But if you go back to March, February to March was not great, right? We went from 10.2 all the way down to 7.2. So that's a $3,000 spend. It's way too volatile. So I'm like, I don't want that. I don't want that. And we've done a better job of dividends and like less risky stuff and covered calls and essentially no option stuff, just selling options and spreads instead of trying to play, directional plays. So that's been kind of the idea. And I like the stability in it. But right now, right, you can see that we're like, we're a couple $100 away from a new high on the portfolio, and SPY's, still within decent drawdown territory from where it was, $20 off its highs. So it's pretty good. I feel good about it. It's into different things, and also a big part of the pullback recently had been because I have a decent position size inside of TLTW relative to the portfolio. And so TLTW, so get my TLT exposure, and also TMF, which is a little bit more leveraged. So we've got, about like almost 3K in that total. So that, those have bounced back this week, which I might as well pull up TLT. So that's why that is doing well. But yeah, I feel like it's being managed pretty good. I'm not like, super, there's no need to be like insanely, I'm not like taking day trades in there. No, like it's not, none of that stuff. It's bigger, mostly bigger picture position stuff. So we'll see how that holds up. $65 for the week. It's green is green, because you'll think about that, and then you'll have those times where like you'll do something dumb, and then you'll be red, and then you'll do another thing that's dumb, and then you'll be more red, and you'll think, you know what? If I just didn't do those two dumb things, I'd be green, even though it was $10. It's $10 better than being red. So there's nothing wrong with that. Especially, we'll see. I don't know how the month of September is going to go, but from what I've heard and from what I've experienced myself, August tends to be a pretty choppy month in terms of direction, in terms of movements, in terms of just like intraday action, kind of slower, choppier. So, it's maybe we get better action, come next month, and as we kind of move forward from here, maybe. Signs for edges can be sharpened. Yeah, no, the thing is, like, there's always something to improve. That's what I think is really, I touched on it on the trade recap that I'll post later, but like there's always something to improve. And so even though you have a shit day, be pissed, be like, oh, why did I do that for a little bit? But then you got to move on from it. And, once you move on from that, don't forget about what you did, because if you forget about it, then what the heck, you're going to do it again. But that's a lesson. It's like, you know what? That's what I think is insane. I'm like, I made these stupid mistakes and I still came out green this week. I'm like, that's pretty freaking cool. When I'm on top of my shit, no distractions, and not making those mistakes, what could I do? That's where you start seeing, wow, the upside potential here is insane. The biggest thing I think is like reining in the downside, like making sure that you are shoring up loose ends to the point where like that downside is, there's protections there. There's things in place, whether that's mentally, whether that's physically with stop losses and maybe max loss days and whatnot. So you can't do more harm. But then like your upside is essentially unlimited. And that's, if you just getting better at your strategy, getting better at risk management, getting better at letting things ride, getting better at scaling in, scaling out, if that's something you do, like all those little tweaks that can be made, like that is your upside. And then your risk management is really capping that downside. And learning, it's really just, I think, a lot about learning about yourself. Like that's the game. You got to learn. Once you start to get a really good handle on your emotions yourself, and things, like for example, today, like now with today's data that I now have, there will be a day like this in the future that will come up. It's inevitable. But making sure I don't trade on that day is at the moment going to be like, maybe there were setups, maybe you missed something. But in the long term, right, that's going to help your bottom line in a big way, because you've learned that, hey, when I feel like this, when these things happen, when there's this going on in my life at that time, you don't do these things. Just as a precaution. Maybe there'll be some days that again, it's probabilities. Maybe that there will be a day where you do trade when you have all these things that say don't trade, and it works, because that's just the market. The market could work. It might. There's no way to know. It might. But then there'll be more days than not where it probably doesn't work, and not trading in general on those days or when those things happen is going to remove that net negative out of your month or your year, which will improve your bottom line. So that's how you have to view it. And that's how I'm going to view it going forward here. So I want to pull up silver. Yeah, so silver is another key piece of the portfolio, why it's doing so well this week. This is up nicely off of the lows, kind of a double bottom look down around the lower 22 level. I like what I see. I have sold a covered call on AGQ for the 33 strike out to September 15th. So I have about 2.5 weeks, or I guess more than that, 3 weeks. Yeah, it's 3 weeks from today, I think. 3 weeks for silver, or for that. So that's a lot, right? AGQ could do a lot in 3 weeks. It would need to get and eclipse the recent highs, which were around that same level, which I believe silver at the time was up around 25.25. So silver would need to get up decently over, it needs to go at least another $1 from here, and then I'll get taken out, which could totally happen. I'm going to be fine with that takeout. In a perfect world, I would, we get a consolidation pullback, and then it goes for, and then I stay in, then I can sell a covered call, and then I capture some of that breakout move. There's no way to know if I'm going to be able to do that. But if I get taken out, then I will look to continue to play silver, but I'll play it with SLV, less risk. And if I want to get in, I'll probably be using this level as the risk. So I don't want to see SLV below this 2050 or 2045. If it drops below that, I will no longer be interested. So what I'll do, let's say SLV rips, right? And I get taken out of AGQ and SLV is somewhere up here, just for example. I will probably sell puts on SLV somewhere down in through here, a week or 2 or 3 or 4 out. And then if it drops, maybe I get filled. And then, my downside risk is capped to here. If it doesn't and I never get filled, it'll be a little bit piece of a cash flow, but that's how I'm going to play it if I want that silver exposure in the portfolio. So the other thing though is that if silver goes here's the chart. If we zoom out on the chart, if silver was to push up into 29 plus, let's say it breaks all-time highs, or whatever. I guess these are highs, not all-time highs. I don't know. Yeah, not all-time highs. Let's say it breaks the highs of the past couple of years. It goes 30 plus. I'm not going to be interested in buying silver at that point in time. I'll just let it do its thing. Maybe it goes to 50. I don't know. But I'm not going to mess with that. Let it do its thing. First, not going to trade today because of Powell. But see, that's the thing. There are people who will say, I won't trade because of Powell. To me, it's there's nothing wrong with trading. It's just know when Powell's speaking, know what that could bring. And then if you get a setup on the back side of it, why not take it if it fits the system and strategy, right? Why not? But after Powell talk, I saw a very good setup. Told myself, stop being afraid of giving back gains. No, that's the thing. If you're in something and you know that Powell's coming on in 5 minutes and he could and he does move markets and the markets will move back, that's a 50-50 shot. You're asking for trouble, but it's post Powell. You now establish your risk levels based on what you're seeing, and it was still pretty choppy today, to be honest. I mean, post Powell was still not the cleanest of moves, but I don't see a problem with that. I really don't. Just like anything else. Some will say, I don't trade on days where we have CPI. Maybe generally speaking, CPI is a volatile period, but there could still be setups by a couple hours into the open. There could be setups. As long as they're not taking half-ass setups and they're genuinely good. Yeah, no, that's the thing. Today for me, I had AMD, and I'll pull. You'll see the trade recap. But the thing with AMD is that this is it was a literal half-ass setup. That was the definition of what it was in AMD, and I had a break of a key level that I was looking for, which happened to be $100. So I got in, but the way it broke on the 5-minute chart did not fit any of the criteria that it kind of got close, but it did not technically fit the criteria that I look for. And so it was a half-ass setup, which was dumb. But you live and learn, my friends. You live and learn. Okay, outside of that, GNRC. So I want to just check in on this portfolio to see how everything is doing in here. Because I don't want to talk about this stuff, to be honest, much in the... if I make a video, I'm not going to do an entire video on this. I'll just do it on the streams because we can talk about it live and we can look at the charts live and see the thought process. So GNRC is Generac. We have 110 by 105 credit spread puts. These are now up. I sold them at 190. They're now up 25% as we speak. I'm looking for these to expire worthless, but I have out to the end. I have a month on these. So lots of time there. As long as GNRC... pretty much does not break back below this blue line, I'm good. It could flatline, you know what I mean? It could push up. It could even pull back a couple of bucks. down towards 110, and I'd still be at max profit as long as it doesn't break below 110 by the expiration. So we're good. It looks good. It's actually building some higher lows. It looks good on GNRC. So like that. TGT, oh my goodness, Target's been getting annihilated. Here's the daily on Target. Today, again, kind of a same deal. Broke even lower, made a new low of the year. I had sold a 135 by 140 call spread. So I got paid $86. And these go out to September 15th. So about 3 weeks out. So still got some time, but these are now essentially worthless. I could, if it goes, I could look to buy them back for like a couple cents. I might, but don't need to. I can let it expire worthless and capitalize on the entirety of that. There. We have some Boyle puts, which are a put debit spread out to 9/15, which is about a month or 3 weeks out. This was a trigger on the breakdown under 4 or 250. And my stop loss is going to be at 267 or 268 on natty gas. So it's tight. It looked good yesterday, but wouldn't be surprised it doesn't work on nat gas. I like the rejection here that we saw here, and then break of trend. So it's like kind of barely breaking trend. So we need a cleaner move down, and it's still valid until this breaks, but it's a fairly small position. So that's what I also have. I added that out a couple weeks. Other than that, though, that's it. Like that's like that stuff. And there's just the share positions that we've got. We're in ARC. We've got everything else is just chilling. Same thing. The ARC was the only thing I think I bought the rest of it this week. I have an average cost basis of 40.70 on ARC, so I'm currently up 1.26%. But I sold a $43 covered call at 14 cents for this Friday, which it's going to expire worthless unless ARC rallies $1.80 in the next 30 minutes. That's $14 of cash flow. Not a lot of money, but I intend to do that week after week after week and try to pull in $15 a week on ARC, which do the math on what that comes out to be. It's not bad, at least. So that's kind of the game plan on it. So we'll see what happens. This past week was not the best because it was moving down and early in the week. So call premiums were not that great. So you couldn't really sell. You couldn't really get a lot of juice, a lot of bang for your buck. But, still pretty good. And that's an extra cash flower in the portfolio. So we're just kind of chilling there and not a lot to do else otherwise. So leave it alone. And that's just the deal. Yeah. So that's the whole update in the portfolio. I think I mentioned last week on Friday that I should track my Robinhood account on TradeZella, but it does not work. Like TradeZella cannot determine when you sell options versus when you buy. So when things expire worthless, it like completely jacks up the P&L. So it's like completely not working. I'm sure they'll get it fixed at some point. But if you're like selling calls and selling this and selling that, like it's not going to do a good job of estimating your P&Ls properly. But because year to date I'm up like 42%, but it tells me like I'm down like a couple $1,000 on the year on TradeZella, which is not the case. Oh, firm's up 30% today. What? Ah, they had earnings. Yes, they had earnings yesterday. That'll do it. Remember mRNA? How that thing got destroyed? Now it bounced back massively. And now it's rolling back over. This is actually like, oh, look at that. Talk about a retest short. Like, obviously, not to the style that I like to play these days. Personally, I like to play when we have break in pattern, break in momentum to the downside or upside. This is not breaking anything. It's just kind of, it broke. And I actually played a little bit of this. It broke after earnings. I played it. And now you have the retest. So now, as long as it stays below, like let's just call it 120 to give or take, this looks like it could be like a bleeder back down if it stays through the current pattern and trend. So I don't know. Now I did see a couple of things people talking about the COVID's coming back. This is this fall and whatever. People are saying, oh, here it goes. So maybe that's why it got a little bit of a pop. But I don't think that people are going to be buying mRNA because maybe people getting the flu or COVID's coming back a little bit this fall, which like probably will do every fall, every winter time. I think that trade is socked full of longs who are stuck, and it's going to have pressure to the downside. So if you want to get in on the short side with a nice tight risk, it's not a bad idea, I guess, based on the chart. But you'd want to just let that thing bleed out. So maybe selling options is a better idea. Outside of that, let's check on some of these charts for some large caps. Netflix's chart, Enphase. Oh my God, Enphase is getting crushed. Enphase, I don't know how it's doing from oh man, look at that. From a fundamental side, I haven't followed, but I know people really liked Enphase a while back. It's done very, very well. Now it's unraveling. So I wonder if there's some issues that they got going on Enphase. But maybe that's a buy the dip opportunity if you're like a long-term investor on it, But it is coming down to a spot that has bounced before, but it doesn't this is kind of not a lot of volume. Could easily see this thing kind of dump if it wants to dump, right? The market's weak. Let's jump over to Google on the daily here. Google's still, I had to break the all-time highs, or not all-time highs, new highs of the year, but it still held up. Like it came back into this area and held up again. So it's looking okay. It's closer to highs than most other large caps out there. Amazon not that far off from highs. So if we get going back to the upside, Google, Amazon could be two names to keep an eye on. First, Meta is at 286. I would want to see Meta back over $300 psychological level. AMD is a wonky one. AMD's I would want to see it back over like 112, back over yesterday's highs to think about longs. NVDA kind of the same. Well, NVDA I think is fine. Honestly, if NVDA can get back over can get over 480, which was the prior high, this is a great trader to the long side if it prevents opportunities. I think why not? MSFT, I would want to see it get back over like yesterday's high. Apple, same kind of deal, get back over, was that Wednesday's high? And then Tesla looks pretty interesting here. Yeah, look at this. Talk about an interesting look, by the way. This could be, like this bounce, this spring kind of bounce off that level that was a prior resistance, now support that we got. And now you're getting a little consolidation right up into what we've also established to be a key level. If Tesla can pop through 241s, like this could pop it up into the 250s. That could be, I don't want to say that's a swing trade because it's not breaking it, but like just looking at it, has a look. Obviously, it's been in this downtrend, but if it can break that level, this could be a nice, you can get a nice little, it's almost like bull flagging to the upside if you pretty much only consider the time from last Friday to now. You got a little bit of a move up, consolidation into a resistance, and if you break that, could provide a good move. Big if though, but that just actually looks pretty good. That looks pretty good. Like the Russell this week, you discovered that it respects importance in a very clean way. Cool. Yeah, I've found that I've gone to the Dow to DIA a couple of times, and bigger time frames, yes, but the short time frames not so much. The Russell, I when I'm looking for stuff and I'm looking for relative strength or weakness, I'll come around to IWM, and it tends to be a good trader for me when I'm looking for something like that, or when that's like the only logical play on the day for me based off the strategy. NVIDIA at crossroads. Yeah, it's a spot where let's go to NVIDIA. I really like this Tesla chart, by the way. NVIDIA. I don't know. I saw a crap ton of price target upgrades this week too. Not that like you want to play into that because a lot of that stuff is just BS, but a crap ton are way up there. Enphase can be dipped by understand the company, and Jim Cramer doesn't like Enphase. Of course, if Jim Cramer says he doesn't like it, then I think it's a buy. Enphase around 120. No, I mean I think from they were killing it like a year or two ago. From like a fundamental perspective, people were liking them and whatnot from what I saw. I don't know. I'd see if that's changed, but without even thinking if that's changed, if you were a buy the dipper and like, yeah, I want to get some exposure to Enphase, seems like a decent time to do it if you're, in for the long haul. Just not a huge fan though of individual stocks for me right now, as in like long-term investments. I much prefer the ETFs, the cash flowers, and all that stuff because it protects my downside, and I pretty much know what I'm gonna get on the upside over the course of years to decades. You know what I mean? I don't have to think too much about that. Like the market dips, it's generally speaking, bigger dips, generally speaking, gonna be a buying opportunity. If you're patient enough or you can wait long enough. So that's kind of how I view it. When you get into individual stocks, like you have the individuality of the stocks, and they could go through good and bad times based on the economy, macro, this, that these ETFs might not be, or might be immune to that. So that's just like that. That's why I think it's easier, and it makes me not have to worry as much. Doesn't mean I won't play here or there when an individual stock has a chart set up, but like the majority of the longer term holdings are going to be in ETFs and with diversified plays. Kyle's in the house. Didn't think. No, I was. It's Friday afternoon. Why not? What else are we gonna be doing here? No, but it's a good day. It's a good day to stream. Now going into next. Let's look at the big picture charts here. Going into next week. Let's see. I think the key on SPY. I want to come back to that Tesla in a second. The key on SPY, though, I think is it's kind of a higher low. Wiki action, weird action. Is if you get back over if you get over 445, it looks good to me. So if you guys didn't see this too, I may as well pull it up. Sentiment survey. So I'm actually kind of surprised by this. This came in with net more bears this week than bulls, which I'm not super surprised based off the headlines and how kind of sentiment has felt social media wise, kind of, but interesting to say the least. I think that this has kind of declined and we're seeing bears back, which is good if you're bullish, if you like the contrarian side of things. So based on what I see though, I mean, I have been here for a lot of these downside plays this month, and maybe it's just because it's the August effect, but a lot of failed follow-through moves to the downside when we could have had bigger breaks across a lot of stuff. So just kind of gets me feeling like, doesn't mean, I mean, just not seeing that there's just not enough sellers to keep pushing this thing lower. You know what I mean? So whether that's people are buying or people have already sold who want to sell and that's it, I don't know what that is, but just not getting that follow-through. Now, seeing what it seems like to get that, of course, anything can happen. Like you probably need some sort of news event, something new to hit to get people to shit their pants a bit and start dumping stocks. And people thought, oh, here comes Powell today. And it seems like Powell did what he did, and it's a nothing burger because we're right back into like essentially the middle of the range of this week. So this week didn't really do much. Like we bounced Monday. We're kind of like just above Monday's highs, like right now. Yeah, so it's like, oh, so you pretty much went Tuesday, Wednesday, Thursday, Friday, and made like a 0.5% or 1/4%. Like, yeah, that's it. So that's the deal there. kind of same thing on Qs. The Dow broke a nice level of support on, was that on Thursday, yesterday? Let me get rid of this alert because I actually played that yesterday. And it worked, but I did not hold it overnight. And I guess looking back, it was good. I guess you could have still gotten out today on this lower wick, but kind of good. IWM, kind of looking similar to the Dow almost on that wick. We were saying IWM from a swing trade perspective honestly looks decent. Like if you really were like, yeah, I want to swing trade something and I think the market's going to go up for X, Y, and Z reason, like IWM could be one of those that, does well. Yes, it's a little more volatile to the downside potentially if we see weakness, but based on this, you hold these lows right here, which is like 168. That's your risk, in my view. So you don't want to see it drop below there. You drop below there, and then I would be like, I wouldn't want to be in that trade anymore if you were trading it. So still kind of way up above, but you've back tested like halfway through. Kind of the same thesis I have with ARK. Not thesis, but same idea on ARK. Now ARK, I am completely fine buying this thing if it does, or holding this thing if it does go to new lows. If that's the case, it's the case. I'll be selling covered calls along the way, so at least it minimizes some of my downside. But I would thought like, okay, 30 to 50 or 29 to 51, and here we are at 40. I'll take 40, split the difference, and if we just do this shit for the next couple of years, I'll be selling covered calls, and my position will be flat, and I'm totally fine with that. I'm not in a leverage thing. I'm not in options. I'm selling options, so I'm cash flowing a little bit. So I'm paying myself a dividend because ARK doesn't have one. And it's like, okay, that's it. Swapped SCHD for DSTL. Yeah, I briefly saw the chat. That looks like a decent idea. When we trade on that front, yeah, I think that's the way to do it. Because when you trading individual stocks gives you more range, because individual stocks are going to be more volatile than the S&P is on a given day. So if I'm like day trading, right? Like, do I want to day trade, SPY, or do I want to day trade Tesla if I had the choice? Probably Tesla, because then I can say, okay, Tesla is relatively strong or relatively weak compared to SPY. That gives me a slight edge. And then based off of that, right, I can get a more volatile move as well on Tesla versus SPY, which could move contracts or move my position. Better bang for your buck is all it is. But yeah, I prefer that for sure, because that momentum you can get with individual stocks could be really juicy compared to the S&P is the S&P, which is fine if you play the right option contracts. If you really want to, you can still make money, or futures. It doesn't really matter. But the moves are larger. So when it comes to investing, I'll invest in SPY. I'll invest in ETFs and whatnot that are pretty boring, that I know, if the market goes up, these will generally go up. Market goes down, okay, these are going to go down. But if the market kind of goes sideways, I'll get the dividends and I can cash flow them. And it's pretty straightforward. You don't have to think too much about it, which is the idea. Bought some CL. Boring stock. What's Kathy buying or selling? I have no idea, to be honest. Let's check out what she's currently at. What her top holdings are, though. Top holdings: Tesla, which I think is fine. I'm happy with that. Roku, Zoom, Coinbase, maybe. If Bitcoin's doing great, fine. I'll be happy to be there. Path. Okay, let's check out Path chart. I haven't seen that chart in a while. Path. Yeah, not really very, not very vol. It's like a $5 range. It's been trading in the past couple months. Yeah, okay. SQ do well if Bitcoin as well. Unity software. I like Unity software. DraftKings, Twilio. Yeah, Okay. I mean, Roku and Zoom, I honestly like not looking at fundamentals on these guys. And that's where I kind of trust them. Although, do you trust them? I kind of like this chart on Roku. Like, I really do. It looked good. I mean, it's been nice and steady. It's a nice pullback, but it's like right back into some prior resistance, maybe acting as support, playing like kind of let's play in line to line. It's just stair stepping its way up, which is pretty cool on Roku. So I kind of like that chart. Zoom is a little different. I think Zoom's getting destroyed, or it's been getting destroyed. Oh no, it's just kind of sitting there. So again, like Zoom's a stock that is Zoom going anywhere? Or probably not. Yeah, I had the pandemic pop because of the crazy, like, oh my God, this is the future and this is where everyone's going to be. But then everyone's like, oh, back to work. But like Zoom's still a very popular thing and a very usable thing. So whatever. Either way, you're buying this thing when no one wants it, in just like the ultimate like despair mode of like, if you bought into this rally, anything over $100, you're like, holy shit. And now look at it, just dying. That's the danger that I think. Now, you ask a lot of people, I'm curious, people think about this, on NVDA. What do you think about this thing? What do you guys think about NVIDIA? Because there's a lot of people now that are kind of in that same boat, that are like, price target upgrades, 600, 700s, 1,000, all this stuff. They have no competition. No one's even close. They can write the ship. They can do whatever they want. This is a beast. And this is going to be the next like biggest thing of all time. There's a lot of that kind of sentiment going around, or there has been with it. So here's my take. It's like, I don't own it, so I don't know. But I'm like, that's exactly the time that you'd want to be doing the opposite of what people are saying. Like, people are telling you that this company has absolutely no competition and that they can just go to whatever they can do whatever they want. Like, there's almost no way that that's going to hold on forever. So because of the pricing of the future, right? Like, wouldn't this be a time when everything is a beautiful sunshine rainbow, is looking amazing? Like, this is the time to be like, oh, maybe I want to trim some of it. Not necessarily go short at all, but like, would you want, like, because then what happens if like in 6 months, NVIDIA does this and now you're sitting down here at 285 and, it's still got crazy PEs and whatever, all these different numbers. It's still got crazy numbers, and now everyone's like, well, here are the challengers. Here's this competition starting to arise, or this happened with NVIDIA. This is the big change in the macro or micro or in their market. Like, that won't really be talked about until you're already down a bit, right? So I don't know. There's no way to predict the top, but I mean, if you ask me, you've got all like a lot of the things aligning. You're not going completely parabolic, but I guess you could say that you have been on like the weekly charts, I guess you could almost say. But you got a lot of stars aligning that would signal like greed across the board, if you ask me. And do you want to be buying that from an investing standpoint? Maybe if you hold it long enough, it's fine, but I don't know. Holding OIRK for the long haul. Yeah, I think the yield max stuff will be. I really am curious to see what happens over the next like couple of years. Like, go through rallies, go through declines, and how do those things hold up? How do they do? What's up? How's it trading day to day? Today was terrible. I'll have the trade recap up. I did finish the week green, but not by much. So if you go back over the past couple of days, you can probably do the math already, but it was pretty bad. Just a lot of things lined up that told me or were really good reasons to not trade. And sometimes you need one of those slaps in the faces to kind of be like, this, but here's another example or reason why you don't trade when these things are lining up in your life and on the charts or in the markets. And when that's the case, much better off just taking a break-even day. A $0 day is a break-even day. And you didn't have to think about it. No mental extra work or whatever. You just didn't do it. NVIDIA, I would start locking profits up. I don't know. I would, personally. But here's what I said, because like I was talking about my dad who has Nvidia, and he's kind of like in that camp because he's hearing people on CNBC, Bloomberg, whatever, talking about it. And this analyst says, oh, it's going to go to 700. This guy says 1,000. This guy says there's no competition. It's a beast. And I'm like, yes, okay, that sounds great. Like that's a great investment. You did very, very well. But okay, you bought what you bought. The thing is up well over 200% from your entry point, something like that. So my thought was, okay, hair in my mouth, dog hair. Jeez. Now, given that, sell every week or every month, take inventory and sell a chunk if it keeps going up so that it does not eclipse X% of your portfolio. So let's say that you originally bought it with 10% of your portfolio. And now Nvidia is worth 25% of your portfolio because of the appreciation. Let's sell 5%, maybe another 5%, and just kind of slowly trim off 5% until you can get it back down to 10%. This is going to lock in your gains. It's also going to minimize your downside. Now, of course, there's tax repercussions there. So if that's fair to be, thoughtful of tax time and whatnot. But if it's in an IRA, even better. If it's in an IRA, then just take the freaking gains, or at least minimize the exposure. Just like we talked about, and we said, months ago for Apple, when Apple went to all-time highs, I'm like, hey, Apple goes 200 plus, you got to start thinking to yourself, and it just shy of $200. It broke all-time highs though. You got to start thinking to yourself, if you're a big Apple person, you got a lot of Apple, what's the risk reward here? Into a new all-time high. Apple has done very, very well over the past, decade. It's definitely not going to see the same type of growth, most likely, that it has seen over the past decade going forward. There'll be other companies that come out. But, do you want to be 55% Apple in your portfolio, or do you want to start to minimize that and de-risk? And then with that fund, with those extra funds, it's not saying go buy the next best thing. You might not know what the next best thing is. And if you don't, then maybe go buy a dividend ETF that pays you monthly cash flow. And then it's safe. Your downside will be protected. So if we get a big move in the market to the downside and Apple drops 40%, maybe that dividend ETF drops 20%, and it's paying you a monthly dividend. That's nice and fat. Same with Nvidia. If we get a big move down the markets and Nvidia drops 60%, well, because what did it do back during the prior rally? Nvidia dropped 69% roughly. So if it drops 60% from here, which, people are like, no, it could never do that now, right? But let's say it did, 60% is back down to like 180, right? At least you're protected to some degree. And you're not going to have to suck that entire loss or sit in that entire loss, right? So that's my thought. And it's also interesting that Kathy Wood and co, because now you can say what you want to say about them. They did not handle the recent pullback in the markets very, very well, obviously, because their ETF has gotten crushed. They got a bunch of ETFs. I'm sure you can track other ones. Some have probably done better than others, but either way, she's gotten crushed. They got some smart people in there. And for whatever reason, they were selling Nvidia, or whenever they sold it. They were selling Nvidia because of whatever reason, somewhere in here. And they have it in other ETFs, and they've been selling some. But they've been selling it for a while. And she's been talking about how there'll be other, names that'll be, the bigger winners than Nvidia. Nvidia's had a big move, So I don't know. There's people who are on both sides of that story of yeah, it's cool and great, but also there's risks, This Tesla chart is extremely tempting to take I don't know what you would do. What would you do? Put credit spread. Yeah, 228, 230. Contrarian for NVIDIA is valid. I don't know. I mean, you're at a point where people are like, you don't see a lot of negative on it. You did a while back when it was like a little bit lower, talking about how it was so risky, the PE ratios and stuff. But now you see a lot less of that. It's just funny how it works. The stock went higher and you're seeing less talk and less concern about PE ratios and more about how there's like no competition. The thing can go to $1,000. Like the sky's the limit here. It's like, okay, well then that would have been great to have known or to talk about 6 months ago. But now it's being talked about as the stock is hitting highs. But that's how things work, right? Swing versus trading strategy. So, well, swing strategy is honestly the exact same as my day trade strategy now, which is momentum. So, for example, mRNA, I think we can use as a good one that happened to work. Now, I only got in for like a piece of this move because there was earnings involved. I don't touch earnings. I don't hold through earnings. But essentially, the idea is you have a level that was respected for multiple periods, and then we break that to the upside or downside, and then you look for the momentum move to the downside, which a very nice chunk of that move came when you fell below 115 down to 95. And so you can play that a bunch of different ways. But that's the idea. Same thing with like the upside. What's a good example of that? Like Tesla, I guess you can say, is a good one right now. Now, it's not happening yet, but like let's just pretend. Ideally, I'd want to see a bigger uptrend than like 3 days. Okay. But trending up, then we had a resistance point consolidate for a bit. And once we break that with momentum to the upside, I want to get in long and be there for the breakout. I have shifted towards much more momentum based as of late on the trading side. Now, if I'm going to invest like this portfolio, the Robin 10K portfolio, I am not breakout trading. Maybe there's like a little position here and there that'll be like in an individual stock for like, spread or whatever, but the majority of it is just holding positions and selling covered calls and getting paid dividends. And that's it. So it's going to be a slower growth, but a consistent, steady grower that I will add to over time. Right now I've got other priorities, but hopefully in the next like year or two, I'll be able to like put a lot or funnel a lot more money into this guy. And so in the meantime, if I can just kind of let this thing cash flow and just give off a few bucks, and if the markets generally go up, cool, this will go up, and that's kind of the idea. If they go down, this will go down, but hopefully I have some stops in place, not stops in place, but I've got methods in place to minimize the downside. And so I'm not going to be feeling a lot of pain from that compared to how I had been in the past. That's the idea. But I'm much more of a momentum trader these days versus buy the dip, which I used to be. And that's just not interested anymore. Because when you play momentum, pretty darn fast that you're right or wrong. Like if let's say you played Tesla, on a short, for example, here. This is a daily chart, same thing. Prior support, come down, a couple of candlesticks, messing around, but still putting pressure, putting lower highs into that support. Eventually that support breaks. So let's say you shorted Tesla this day on that break. Within about a week, you got a nice move down and you knew you were right, or would have came in and snapped back out, broken back over the consolidation highs and proved to you fake out and it's going back up, right? So pretty fast versus if you buy the dip, you could get caught sometimes in, let's say you bought the dip here, right? And your targets are like somewhere up in here. I don't know. But this technically would have worked. I guess if you bought the dip at 215, it's 238. It's a pretty good dip buy, right? But now it consolidates. What if it does this? Right? You might be in that for a while. Still could work and could be good, but you're going to be in that for a lot longer. I prefer to be in and out, or I prefer to know fairly quick, right? If I'm right or wrong. So that's like my thoughts on it, on the strategy. That's why I prefer the momentum strategy now. Versus buy the dip strategy. Tesla, I was saying though, This looks interesting at a key level. Back up in the 240s next week, this thing could be good. Back up to the 250s. I think we can see move into like the low to mid 250s if it can break back up over that level. That's what I would want to see on Tesla. What's the lows here? 228s. And the market should be closing up in, what is it, about a minute from now. Just making sure everything is lined up and ready to go. Yeah, we're good. We are good to go here. What percent of the account? Pay taxes once, as of right now, once a year. I risk about $100 a trade. I don't really think in percentages in the account. I don't really care. I think that way. I think in dollars, and then I adjust the account size accordingly. So in the options account, I risk about $100 a trade, and then my take profits are usually 100 plus. So winning trades could be, they could be unlimited, but ideally, if I'm making more than $100 on a trade on a given trade, that's good. And if I'm losing 100 or less, it's good risk management on average. And that's kind of what the stats have been telling me as of this past month, even though my win rate hasn't been as good as it had been in prior months. TSL, I'm selling covered calls on, yeah. Maxi or BITO2. I'll take a look this weekend. What time I wake up? I wake up at 5:45 to 6 a.m. every single day, generally speaking. But it doesn't, not because of trading. I like to do shit before. I'm Central Time, so market for me opens at 8:30, and I don't trade the first 15 minutes. I like to watch it, but I don't trade the first 15 minutes. And I'm also not a full-time trader necessarily. Yeah, I'm here, I can do stuff, but I also have other income streams that are outside of trading, that are outside of YouTube, that I work on or have obligations during the day. Now, I'm still at home, so I can still be on my computer and charts and stuff if I want to, but there are still other things. But yeah, either way, I can still watch the opens, and I can generally be here for close a couple days a week. So I do that for the streams. But yeah, but that's the deal. I get the time I usually get up, and I usually work out early, so get up at like 5:45, 6. I'm at the gym at like 6:15, 4 days a week. Well, 3 days a week technically. Sundays doesn't open until 7, so sleeping in on Sundays, Saturdays and Sundays, I guess a little bit. But just like your body naturally gets into like that rhythm, so you just kind of end up getting up at those times, and it doesn't really matter. Still try to go to bed fairly early. Try to get 7 to 8 hours of sleep a night. So you can do the math on backtracking that when you got to go to bed to get to 7 to 8 hours. But Tuesday, Thursdays, I try to run. Monday, Wednesday, Friday, and then Sunday I lift. And then Saturdays I also try to run, which we're getting back into because of a mini knee injury. I've been going to PT the past couple of days, so we got some stuff to work on there. But yeah, that stuff's done. This way I'm done with that. 7:30, I'm back home, have breakfast. It's 8 o'clock. And then, the day kind of starts at 8 o'clock. But I already get out that, workout out of the way, a couple little things out the way. And then, you feel like you're in a pretty good spot. You're kind of in control versus like if you were to get up and just kind of mosey over to the desk. To me, it's like, that could work. Don't get me wrong. But I feel like, at least I've done a couple things. I'm in a good spot. And I feel like I'm in control of, what's going on that given day. But it doesn't mean you have to do that, Buy nips can get you trapped. No, it could. It very well could. Whether that's with time and option decay, or just in general, right? You can be buying a dip, and then it's easy to kind of say, well, I think it's going to go a little lower. I'm going to buy again. Breakout, it's like breakout level is a breakout level. You can draw it differently. You can, draw it in differently if you, on your charts, I guess. But that level's a level, and then if it breaks, okay, you're in or you're out. And then, you got to establish your risk from there. Make it an opportunity to work. Thumbnail. I don't need that right now. I used to have someone who did thumbnails, but personally, right now, I don't need it. Obviously, I could probably do a better job, but for now, I'm just going to, it takes me 2 seconds to do, and I like having the customizations of being able to do it myself, personally, which is why I keep it pretty straightforward and simple. Keep it lean, right? The runs, I'm back. I'm going to be back this weekend to try them out. So I went to this whole PT. They didn't analyze my run, form, all that stuff. What they figured out was the way I strike the ground. I'm a heel striker, which is not necessarily a terrible thing, but I'm a heel striker, and my legs are extended further out than they should be, or than an ideal run would be. So I'm putting extra pressure for longer on my knees and on my joints. And so specifically the knees, which is why I was having some knee pain, probably led to that knee pain. And then there's like imbalances in my like glutes and stuff. So working to improve my form and just engage the glutes a bit more. And instead of pushing my legs out way far, hitting the heel and taking that whole time for the foot to kind of accelerate off the ground, I can do a better job of kind of landing with less of a heel strike. You're still going to hit your heel if that's your natural form, less heel strike. So you're more efficient and more underneath you. So your body is kind of like right stacked closer on top of your foot versus like your foot out a little bit further, which is kind of my problem. And then you can be more efficient, faster, and then also less pressure on the knees and more, you're taking absorption through the body versus the knees taking a lot more of that force. So that was the problem. And so we've kind of identified that, and now we're working towards correcting it. And so hopefully in a couple weeks, I'll be good to go, ramping the volume back up. But I'm going to start inching that back up this next week or so, and we're going to give it a go. So. So we'll see how it goes. The 10-year finished down. Is that true? Technically, it finished red on the day on the 10-year. So we finished up. Let's just pull up the ports. We finished up with 10.5, which is on the week on the Robin. And this is not. I'm not trading this actively. Up 676. Up a few bucks in the Webull day trades. It's not bad. It was up a lot more. I was up a lot more on the Webull account until today, but I'll post that trade review in a little bit, probably like right after the stream, and then you'll see what I'm talking about when I say like there's other factors at play that I think are important to understand and analyze when it comes to your trading and getting to the desk and like should I trade, because you don't have to, which is kind of cool thing about like if that's your job, like it's kind of cool that you don't have to. And the thing is like most people don't, they're not their only source of income. It might be the majority for some into certain levels, but for most people and the majority of people in general, it can't be a full-time income, and you can't rely upon the income right away anyway. So even more important and it makes even more sense to say, if there's nothing that fits my strategy today, I don't trade and I do my other job, or I do my other active income streams or sources. I work on those things today because this is not presenting something that's valid or worth my time, right? Like that's kind of the cool thing about it. You don't have to do it like every day. Whereas a traditional job, like you kind of have to be there every day, right? You don't have to trade. Like you can not trade and not get paid. Yeah, fair. You don't get paid, but you also didn't lose. So. Those are best for running and walking. It's funny too, my glutes are generally a fairly strong point, I feel like, but it's more like the activation of them while running and walking. I don't generally think of that, and now I'm like a little more conscious of it. Tech or energy? I would not be buying energy because that probably involves a lot of oil stocks. Nothing against necessarily oil, but I am semi-skeptical with the potential possibility of a recession and maybe even a global bigger problem or bigger hit demand-wise globally in the coming year or two. I don't know. Maybe that's concerning to some. Maybe it's not. But this doesn't look terrible. Like this is a higher low here on oil that's developing, which is kind of good. But I want to see oil get back above 90 to start like really considering like, oh, that's pretty good. So if anything, I would say tech, but that's also a risk too, right? You have the risk there with that. My only thing with the whole overall market, and I don't try to be that's not the type of guy that I am anymore. Like I don't do this type of stuff, but factor in sentiment, overall market. Like if this is a higher low or this is a dip buy here, this is a decent spot for maybe a spring into the end of the year, a push to highs. I don't know, who knows, but it's good to see that fear and greed's come back to neutral. It's reset a good bit there. You see that sentiment has come back and it's actually now more bearish this past week. It's good stuff if you're bullish because you don't want people to stay overly bullish for a long time, because the longer that we stay overly bullish, you need these little pullbacks, you need these little shots of fear in order to sustain a bigger picture rally, right? You need the pullbacks to sustain. So we're kind of getting that now. And it's like, go back a few weeks, people were like, oh, I'm going to wait for a dip. Well, here's your dip. Do you want to buy it? So if you were saying that, well, here you go, here's your dip. Now, do you want to buy it? Could it go lower? Yeah. But, you're getting a better deal versus what you could have got, back at the beginning of August. So there's that. Flip is peacing out. Enjoy the weekend, man. Outlook on inflation. I like to follow Trueflation. So Trueflation is they try to do a better job of CPI of giving you real-time CPI. So my take is this. This is a very interesting topic in general. There's a lot of this summer period was semi-expected to be a bounce in inflation, as in like it was not going to continue to plummet like it had been. So kind of like we saw that back in like March to April, how this kind of had this nice little bounce, right? On this chart. And then it's sent to the downside. I'm very curious as we go into the fall and winter, if we are to crack below 2% on this Trueflation, which is like trying to do a better job of like giving you real-time CPI. The CPI that we get from the government tends to have some lags and some delays in there and how it's calculated. So this is kind of trying to be a better picture of that, if you will. So I like to watch this, and it bounced, right? It bounced back up from like almost getting down to 2, up to 2.68, 2.7 almost. And now it's a 2.56. Watch, I would watch this. It's a free site. It's trueflation.com. I'd watch this kind of closely and just to kind of get a feel for like what they're seeing and how that's playing into like what's happening right now. The Fed will talk how they're going to talk and all these different things. But if we start seeing this come down under 2, that would raise some red flags. You also are going to have student loan repayments starting up. I don't know how big that impacts the economy, but that's just an additional tightening factor. Rates have ripped up in the past couple of weeks. That's more tightening. All of these things are, little pieces of the puzzle that have additional lags as well. I was just talking to my dad about this. When it comes to student loans, like that's hitting in like October, right? It might not be 6-8 months until we start seeing those effects, because people spend as they will. The loans start hitting, oh shit, I gotta start tightening up. Maybe you use a credit card the first couple months, your credit card maxes out and you go, oh crap, now you really can't spend any money. And now you really start reining in the spending. So it might take some time, because it's not easy to go from I'm spending $1,000 a month on going out to eat to then saying, well, now I got a $500 a month payment. I got to spend $500 a month on going out to eat. It's tough to do that. You might start off by saying, I'm going to spend, or you might start by spending 900 that next month, and then 800, and then 700, and slowly trickle it back down until it like really hurts you, until you really, really can't. And like that's all going to be money that's not going and stimulating the economy. It's going the opposite way. It's paying off debts. It's paying off loans at high interest rates. If rates weren't as high, I wouldn't be maybe as concerned. Problem is that rates are super high. You can't get a student loan refinance for much below 6%, if even that. You know what I mean? Depending upon the time horizon. So you've got government loans at like 7-8%. People who have bad credit are refinancing, 10+%. So you've got some pretty ridiculously high loans and some high numbers. It's going to be interesting how that kind of rolls all in. Terminal rate, I don't know. The Fed is interesting. They want to nail this one down. And so if we see, the next like CPI, I guess, comes out in a couple of weeks, their next rate hike is September 20 something. 25 days away, 26 days away, September 20th. As of right now, the current projections that it's more likely that they're going to remain paused. The longer that this goes, that they pause, if they don't raise in September, I don't know if they're going to raise in October and they're November or in December. There's chances of because there's just so many other things that could unravel. If oil starts pushing back up and stuff, that'll be a pressure. Like that's for sure. But there's so many other things that are going to start to unravel and you would think push CPIs lower. So we'll see. We'll see about all that and how that stuff goes. But like, for example, for myself, I was just paying off a private student loan, 10+% rate. That's what I was paying. It was a variable rate, but we paid it off, but like 10+% is what it finished at. Now I'm sure it would be like 11% now, or whatever, because the rate's gone even higher. That's what I was paying. So like, if you want to get your own loan, like it's not cheap at all. Like that's a lot of money. Now picture someone who's got, I don't know what the average student debt is, 30, 40, 50K coming on in the next couple of months at 10%. Holy shit. Even at 8%, that's still a lot of money they're going to be paying that they now cannot buy shit, go out to eat, do this, do that, stimulate their local economies like that. Well, that money's going away. It's not going to the economies anymore. So how big of an impact is that? Remains to be seen. I don't think it's enough to move CPI down like 6 points. No, but can it get, CPIs or true-flation? Can it put some pressure on it from 2.5 down to like maybe just below 2? Maybe in the course of months. Yeah. Plus all the other factors, rents, housing, all the other factors, services. If those things keep coming down, and let's say the oil rolls over, which is maybe it does. I mean, then you're gonna have some pressure on the downside here. This wouldn't surprise if it overshoots and goes below 2. Now that's just the top line. There's still core CPI, and then there's core PCE the Fed looks at. So that's all things minus food and energy, I believe. So they're more focused on those things, but still, this is all going to kind of factor in. Maybe there's just more bigger lags that are going to be coming out there. Energy, if oil's going up, generally that's going to be a push up on inflation, because that's going to mean higher gas prices, higher, heating going into the wintertime, and that's a factor, or higher energy prices are a factor in the CPIs. But with that said, I'm going to wrap things up for today for this Friday's Power Hour stream. Hope everyone has a great rest of your Friday, great weekend. And we'll try to get back for a stream on Sunday night, hopefully. If not, we'll do Monday and Wednesday next week. I'll be leaving on Thursday, and I'll be back like next Monday. But I'm going to be at the Penn State season opener, so that should be a lot of fun. But hope you guys have a great rest of your day and weekend, and I'll see you in the next stream. Peace.